Hello and welcome back to my channel. For those of you who don't know me, my name is Clare Wood and I'm a money mentor who helps business owners just like you to make more profit in their business. Today, we're talking about a really exciting topic. It might sound a little bit unsexy, but trust me, this will change the way that you do business. Did you know that the reason that 95% of businesses fail is due to poor cash flow? Now, I don't want you to be another statistic. And the great news is there's an easy way to make sure that you don't run out of cash and that your business stays cash positive. And this tool is called cash forecasting. So what is a cash flow forecast as compared to profit? Well, profit is traditionally a number that is looked at looking back in time. It's checking how the business has performed in terms of the sales that have come in and the expenses that have gone out. On the other hand, cash flow forecasting is looking forward into the future, and forecasting is focused both around the metric of cash as compared to profit and also around the timing of cash. Let's just take a moment and talk about the difference between cash accounting and accrual accounting. Accrual accounting means that you recognize either the sale or the expense at the time that it is incurred. Okay, let's pick a real life working example. Perhaps you are building a website for a client of yours. But the way that it works for this particular website is that there isn't a pay in full amount. What happens is that they pay you an upfront amount of $500. And then in 3 months' time, they pay you an amount of another $300. And at the conclusion of the project, they pay you the final $200. So we've got 500, 300, and 200. So the project is $1,000 in total. At the time that the client accepts your proposal and says, yes, let's go ahead and build this website, under the accrual accounting method, the full $1,000 is recognized in your books as a sale at that point in time, at the time that it is agreed. Because in the eyes of the law, you have earned the money at that point in time, even if you haven't received all of the cash into your bank account. Under the cash accounting method, you only recognize the income at the time that it physically hits your bank account. So you would initially recognize that first $500, then you would recognize $300, then you would recognize the final $200, each at the point in time that the cash is physically received in your business bank account. Now, the reason why it's really important to understand the difference between accrual accounting and cash accounting is that your business can actually be profitable and yet you can be running out of cash. Depending on your business model, your business on paper might look like it's running at a profit, and yet when you look at your bank accounts, you are completely dry of cash. This is particularly relevant if you have a business that has quite a choppy cycle when it comes to your income or sales. So for example, if you're someone who launches courses where you have big months and then you might have some quieter months. Or maybe you have a business that does project style work. And so you have big lumps of cash come in and then you might go periods without receiving any. This is why it's very important to keep an eye on your cash and not just your profit. But the great news is this: when you use a tool like cash flow forecasting, you can be looking forward in time. I usually recommend for a period of about 8 to 12 weeks and having a look at the timings of the inflows and the outflows of cash compared to your current cash balance. This means that you have a view looking forward of what your cash balance might look like in coming weeks. And it empowers you to be able to make decisions around how to do things differently if the cash isn't quite looking the way that you want it to. Now, what we've been through today is just a brief synopsis of the power of cash flow forecasting. And hopefully you've taken away how important it is for you to be doing this in your small business. If you do want to go deeper into the process of cash flow forecasting, I actually have created a mini course around this topic. And inside, I actually have my cash flow forecast template that I'll be giving you and teaching you how you can use this tool in your business. The course is called Confident Cash Flow because it teaches you how to be confident about the forecasting of your cash. And you can find out more about it by clicking on the link below. Whether or not you go ahead and do Confident Cash Flow, I hope that today's video has inspired you to get out there and create a cash flow forecast for your business so that you make sure you never run out of cash again. If you enjoyed today's video, make sure you are subscribed so that you get notified when future episodes land. Thanks for joining me.